You know how everyone says you only get one shot at a generational trade? Well, they're wrong. The reality is actually, it happens more often than you might think. You just need to know what signals to look for. Right now, US banks, yes, the same institutions that once called Bitcoin a scam, have officially greenlit to sell it directly to customers. That means the floodgates are opening for Wall Street to push Bitcoin into the portfolios of tens of millions of Americans. But that's just the surface, folks. There's a trigger flashing in the background that even most pros are missing, but not you guys. What is it? Stick around with me. I'll show you guys how I'm positioning for what could be the fastest wealth transfer of the decade. Beneath the headlines, something deeper is stirring. One of the rarest and most powerful liquidity signals in global finance has just triggered. The last two times it flashed, we saw quiet accumulators turned into multi-millionaires before the public even realized what was happening. And guess what? That same signal is flashing again right now. Add to that a fresh wave of institutional positioning, stealth accumulation from sovereign wealth funds, and early rotations already beginning across top altcoins. And what you're looking at is the spark before the ignition of a mega bull run, the likes of which have rarely seen. If you've been waiting for moments to get serious, I think this is it. Don't wait for the media to catch up. By the time the headlines start catching up, the real opportunity will already be gone. That's why we make these videos on a daily basis. Here's the single most important chart in global macro, one that has called every single Bitcoin cycle since 2013, or I should say bull market since 2013. Global M2, or broad money supply, is the master switch for every risk asset rally. Global M2 is the market's hidden fuse box. When the switch flips, everything changes. Picture it like a tide. When it rises, even the biggest ships get lifted. That's why every time you see M2 ramping up, Bitcoin doesn't just go up, it adds a zero. Most people are still staring at the daily candles, but that might not be the play here. Here's what you should be focusing on right now. This chart from Raoul Pal and Julian Patel shows that whenever global M2 starts climbing, 2017, 2020, 2023, Bitcoin responds by adding a zero within months. But wouldn't that be nice to add another zero? We're seeing that pattern again now. After a year down, global M2 is ticking higher, driven by renewed stimulus in Japan, aggressive credit easing in China, and a softening Fed stance in the United States. When you overlay global M2 on the Bitcoin chart, you see a 10 to 12 week lead time. Liquidity turns up, Bitcoin follows. This time, the model calls for a quick flush toward the 100,000 support box, then a slingshot up to 130 by September. This is more than technicals or chart voodoo. It's about capital hunting for a safe home when bonds and cash are failing. Bitcoin is the ultimate liquidity magnet. And right now, the magnet is turned on. While crypto Twitter argues over short-term price action, the real tidal shift is happening in the bond market. For nearly 5 years, US Treasuries have been in a historic downturn, losing value month after month, making this the longest and deepest bond bear market since the 1930s. Pension funds, insurance companies, and sovereign wealth funds are sitting on losses no one thought was possible. This is a whole new paradigm shift for TradFi. For the first time in my career, I'm seeing the old guard funds panic as their so-called safe assets bleed in value. It's quite entertaining, actually. It's like watching the Titanic take on water while the lifeboats, Bitcoin and ETH, are getting loaded up in broad daylight. But there's another power shift happening under the surface. And if you know where to look, folks, you can front run the rotation. Yet last week, bond ETF TLT pulled in $1.8 billion, its highest inflow ever. Some institutions think yields might have topped, but the smarter money is hedging elsewhere. Bitcoin ETFs ranked in $9 billion in new inflows in just 5 weeks, while gold ETFs saw $2.8 billion in outflows. Sorry, Peter, just Bitcoin superior. Don't get me wrong, I do like, I'm not wearing my jewelry, but I do love gold, but you know, Bitcoin much better. Why does this matter? It's the clear signal yet that legacy safe havens are being questioned and new ones are rising. Bitcoin is becoming the go-to for protecting capital against currency debasement and negative real yields. Meanwhile, US Treasury auctions are seeing record foreign demand. Japan, despite struggling at home with a $12 billion stock market outflow, is moving capital abroad. And as these giant pools of money look for a new store of value, Bitcoin is just standing there patiently, not aggressively saying, hey, come check me out. For years, the biggest barrier to mainstream Bitcoin adoption was simple. Average people couldn't easily buy, and institutions didn't have legal clarity. That just changed. This week, US regulators quietly gave every bank in the country permission to offer Bitcoin directly to their customers. Wow. Stifle became the first to disclose it publicly, but you can bet every major bank is building their own offering now. And why wouldn't they? Their objective is to make money. This is another service offering that people want. Picture your grandma's bank, the one that called Bitcoin rat poison, now quietly preparing their own Bitcoin product line. The old walls are crumbling. This is the on-ramp retail and high net worth clients have been waiting for, just to go to the bank and say, just DCA me some Bitcoin. And it's about to go live on a nation scale. The same week, Russia's biggest bank launches a Bitcoin bond. When you see Wall Street and Moscow moving in sync, you know it's more than hype. It's a global stampede. Robinhood, not content to just dominate US crypto onboarding, finalized its $200 million acquisition of Bitstamp, which I'm also an investor in. I guess that's nice. That means 50,000 retail and 5,000 institutional clients are now in Europe. The UK and Asia now have direct access to a regulated crypto platform. Robinhood is also moving into tokenization, aiming to let people buy fractionalized private equity, like shares in NVIDIA or SpaceX, instantly on-chain. Institutions are going all in. Bitcoin treasury company 21 Inc. just bought 7,000 Bitcoin for $750 million, according to the SEC filings. The other major players are quietly adding to their stacks. The rules of the game have changed, and anyone sitting on the sidelines is about to watch the liquidity flood in. Now, I know a lot of you guys in the comments and watching my videos on a daily basis, like, Kyle, you say this every week, like it's not, the price isn't going up a lot, what's going on? You must have a little bit of patience, right? We have also seen counter flows from the carry trade unwinding, for example. So patience, liquidity is getting thin, buying's coming from all over the world. This is a long-term game we're playing here, right? We're not playing week by week. I'm updating you guys day by day, but we have a long-term horizon, right? And I think that we're gonna see really big movements in the next 1, 3, 6 months, but surely by the end of the year. With the banking gates wide open and institutions racing in, you think the story couldn't get any bigger. Well, of course it can. But just as the floodgates swing wide open and capital pours in, the world stage is shifting in real time. And that could accelerate everything. Most people miss the macro chessboard because they're staring at their phones for price updates or looking if their newest meme coin is pumped on Moonshot. But this past week, Ukraine's drone strikes on Russia's strategic bomber bases did more than damage planes, with up to 27 Tu-95 nuclear bombers destroyed, potentially 30 to 70% of Russia's long-range nuclear fleet. The global balance of power just shifted. Analysts say this is the most dramatic reduction in Russia's nuclear strike capacity since 1960s. It's wild. Just one drone strike, and suddenly, the world's entire risk calculus flips overnight. Gold rockets past $3,400, oil surges, and Bitcoin? It's the fastest to react. When the world gets shaky, capital moves to what can't be seized, printed, or frozen, right? We saw when the whole Russian sanctions came in from the war, they started taking everyone's assets, all the oligarchs and stuff, right? Bitcoin, you can't do that. And the US is extending its tariff pause on Chinese goods, and Japan's central bank is struggling with its fiscal position. And you have a world where investors want one thing, assets with hard-coded scarcity and no political strings. I talk about this all the time. Bitcoin is apolitical. But wait, This kind of volatility is exactly what starts shifting momentum into altcoins. I'll show you where that energy is heading next. Bitcoin always leads, but when the rotation comes, the gains can be absolutely mind-boggling. Right now, Bitcoin dominance, when you pair that with stablecoins as well, is sitting at 71.4%. The last time dominance peaked in this range in late 2020s, altcoins erupted in a cycle that saw major assets 5x, and some altcoins absolutely mind-blowing parabolic 100x's. We're at that calm before the storm phase right now. Bitcoin's dominance looks like a rubber band stretched to the absolute max. A snapback is coming. And when it does, the capital will move so fast, it'll make your head spin. That's why I'm preparing my biggest ETH play since 2021. But as always, timing is everything. Go where the real momentum is. Follow the flows. Solana is the poster child for this rotation. In May, its dApps generated over $217 million in revenue, more than every other L1 and L2 combined. Solana's on-chain activity is massive, $650 million bridged in May, and nearly 450 million transactions in a single week. New apps like Axiom Exchange, a Telegram trading bot, is breaking revenue records. Circle minted 1.7 billion USDC on Solana, and the company's preparing a $7.2 billion IPO, with BlackRock and ARK Invest waiting to get in. And again, full disclosure, I am an early investor in Circle, so this is another pat on the back for me, but I needed to disclose that anyway, since I am an investor. Anyway, moving on. On the Ethereum side, we're seeing the setup for an epic supply squeeze. Exchange balances are at their lowest point in 7 years. Big players are staking and locking up ETH. SharpLink is planning a $1 billion ETH treasury buy. And there are credible rumors that BlackRock is pushing for ETH staking ETF. And if this is approved, this could send Ethereum north of $4,000 really fast. The altcoin market as a whole just marked a 4-year cycle low, according to CryptoQuant. When Bitcoin dominance starts to slide, that's a historical trigger for alt season. And here's my personal edge. I'm preparing to make my biggest move into ETH since 2021. I'll be scaling in when BTC dominance breaks because the risk reward on ETH and top alts could be the best bet we see all cycle. What I'm about to talk to you in a second here is my rotation of when I'll start putting more capital from maybe even Bitcoin into Ethereum as I start to see the really clear signs. I'm not quite there yet, but what I did do, and I talked about this on my X account, that's why you have to make sure you're following me over there as well, at Kyle_Chasse, C-H-A-S-S-E. But as you can see here, the other day I said, I think this is a really good time to start going into ETH, even though that video that I was quote tweeting was from the Golden Cross for Bitcoin. I still saw the rotation happening into Ethereum, right? We see the ETF start buying, and Bitcoin was like 103.7 or 8. And that's when I started taking the dry powder I did have left and putting it into Ethereum. It's not my big rotation that I'm about to talk to you about, but I did start because I had dry powder sitting on the side. What we're about to talk to now is about potentially rotating Bitcoin into Ethereum if we think that ETH BTC pair is topped pretty soon and Ethereum will start to outperform Bitcoin for, let's say, the rest of the year. Now, this is a thesis. We're going to dive into that now. Even the strongest macro doesn't stop crypto from shaking out the impatient. If you've been watching the channel, you know I've been talking about Bitcoin's golden cross. A golden cross is like a green light on a deserted road. It means go, but you still need to watch for potholes, pedestrians, these kind of things. Every single time since 2015, we've seen a fake out dip before the real move. If you're patient, you accumulate while everyone else panics. But set your guardrails. No one gets rich going all in at the top. Every single golden cross since 2015 has led to a 10 to 15% correction within 3 weeks of the cross. Momentum is shifting too. The daily RSI is making higher lows while price pulls back, a clear sign that bulls are quietly loading up. So here's how I'm attacking this setup step by step. 1, accumulate the dip. My approach is simple. I'll be setting limit orders, just buy orders essentially, and laddering in new buys between $97,000 and $104,000. That's where the average realized price of short-term holders is sitting. And it's already acted as support on recent dips. And I've talked about this in my short video as well. And that means I'll be looking to enter my highest conviction altcoins, Ethereum, etc. And we'll go into more details on what those picks are as we get there, right? I want to take you guys with me day by day as the market changes, because it's so dynamic that what we talk about today might change next week, and we'll let you know if we do. And if it goes below, then I'll reassess. If we lose key support levels and close under the 200-day moving average, around $95,000. I really don't think that we're gonna get there. There's so much tailwinds behind Bitcoin, but you never know, right? Some crazy geopolitical thing could happen. I don't know. But if it happens, we'll let you know how we play it at that point. So if you guys wanna know how I ladder in during choppy markets, I usually try to break my buys into quarters. Laddering in at my strike zone, I'll deploy like 25% for each 2% move lower. This keeps me in the game even when we get a sudden capitulation. Step 2, rotate when Bitcoin and stablecoin dominance combined peaks. Historically, Bitcoin and stablecoin dominance combined have peaked around 71 to 73%. If and when we see prints above 73% on the weekly chart, I'll rotate 20 to 30% of my Bitcoin profits into Ethereum. I'll tell you guys as we do that. For now, I'm just letting you know the plan, because I want to be in Ethereum before the ETH staking ETF start. Remember what a crazy run we've had in Bitcoin since they started accumulating Bitcoin aggressively in the ETFs? I believe we're going to see something similar in Ethereum as well, especially now that staking is legal on the institutional level. Step 3, speculate after breakout. Once Bitcoin clears $115,000 with strong volume and holds above it for a few days, I'll take a portion of gains and start playing high beta alts. Solana ecosystem coins, maybe Sui ecosystem coins, Base ecosystem, top DeFi protocols like Aave. Remember, when I'm exploring these higher risk plays, I'll never bet more than 5% of my stack. This is about riding the rotation, not gambling. But I'm always interested to see what you guys are doing. So comment your strategy below, and I'll feature the best ideas in next week's show. I'm certainly gonna look into them. I read all the comments. So guys, I love your comments. I know we get a lot of spam in the comments. It's horrible, but try to get around those and let me know. I read everything. The market has been in hard mode for the longest time, but now everything is changing. Global liquidity is surging. The bond market is broken. Banks are finally bringing Bitcoin to the masses. And geopolitics just delivered the biggest power shift since the Cold War. I'm not waiting for headlines to give me permission. This is the moment for calculated risk, the kind of opportunity that only shows up once every few years. I'm doubling down, especially on ETH. And I want you to have the information and strategy to decide how to play this. Share your top altcoins and ETH beta plays in the comments below, guys. Do me a favor, destroy that like button, subscribe to the channel if you're not already, and don't miss our next breakdown. Stay humble, stay patient, and keep stacking your Satoshis, because the next generational trade is happening right now. See ya.